Okay, recording this video on Sunday the 6th of March 2022. It's just gone 6:22 p.m. Chicago time. Do hope you are doing well. So this video is going to be about the global macro charts. Just going to roll through some of the forex charts and some of the futures charts to show you where the capital is moving at the moment. When I looked at my charts on Saturday after the market close on Friday, I kind of got the impression that these moves that we're seeing are starting to really turn into longer term trending type moves. When the whole Ukraine situation started up to kind of really heat up a couple of weeks ago, I suppose in my mind I thought this was just going to be a short-term thing, flash in the pan, where we get some pretty sudden moves in markets, but then everything kind of goes back to trend and we kind of get a reversion of those moves. But having looked at my charts this weekend, I just got the impression that things are moving into a far more long-term trending type activity. So I'll show you those on those charts and see if you kind of agree with me. Just quickly, the E-mini opened up about an hour and 20 minutes ago, and we opened down, what was that? We've gone about 50 points to the downside from, this is the close on Friday and this is the open Sunday evening, so we're off about 50 points from the high there. I'm still short and I'm still looking for this exhaustion sell signal on the 15-minute chart. A couple of videos ago I talked about this massive short covering rally that we had, and this was the exhaustion buy pattern that shows that short covering rally. We rolled over and we've kind of gone down. The open on Monday should be below this little low here, because we're currently down at 68s kind of, and this number at this pivot low here during the day session was about 75, I think, so we're likely to kind of open gap down and just see where it goes. But I'm looking for an exhaustion sell on the downside there. And I've also put out a couple of tweets and a video in the last few days talking about the triple pattern. We've got triple resistance on the 15-minute chart, and big things happen at triples. So this was the first kind of triple signal that we had, and we started to sell off, and then we had a little bit of rally back. We actually have another triple sitting underneath here. You can see those, the SR1, 2 and 3 numbers are all white, which shows there's a little there's a resistance on the lowest time frame just sitting underneath one of those bars there. So that's got to play itself out at triples. We either get breaks through the resistance into a very large move on the upside, or we get resolution of this resistance and it plays off down to support on the highest time frame at least, and that'll be when these bars kind of come together. So that's what I'm looking for on the downside, some kind of exhaustion move on the downside, and all these things start to come together. We get a cyclical pattern as well as a volume pattern coming together. But anyway, so let's go to global macro type stuff. This is the beta rotation indicator here, where we can load up some ETFs and compare their performance over the last year. And you can see that crude oil is the top of the rungs here. This goes from 0 to 100 with relative performance. Crude, during 2020 was the weakest performer of the whole lot. It was stuck down here at 0 compared to everything else, and then in the last this kind of jump up move, it quickly became the outstanding asset performer here and has been top of the heap there. But it's interesting to see what's kind of moving up and moving down in the other asset classes. We've got industrial metals here, so that's kind of copper, looking pretty good. Ag has been pretty strong over the last year, but it's kind of coming off a little bit now in terms of relative performance. Real estate is definitely down there. Gold, we've got kind of made a really strong move from being pegged down here at the 0 number to kind of come back up to the kind of mid-30s there. Equities are kind of coming down here, and we're starting to get a little bit of a move in the government bonds market here. Junk bonds not really moving strongly, still there, but government bonds is taking off. And the weakest performer of everything is the emerging market equities there. And we can look in that in a little bit more detail, so we can split this out, the emerging market equities, into different kind of equity markets here. Again, the same indicator, the beta rotation indicator, where we load on ETFs that cover each of these different markets. Of course, Russia down here, RSX is the ETF that covers the Russian market, pegged down at negative 78 kind of down here. So huge underperformer, as you'd expect. China doing poorly, Korea doing poorly. We got the EuroZone is also really kind of coming off there, and I'll show you the Euro chart, and that's kind of a story to be told there. Japan not looking all that good. But and the UK has also kind of come off badly. So the European markets are doing badly, and the forex charts are doing badly, and I'll show you those. But we do have a little bit of strength in the commodity market. So Australia is doing well, and Brazil is doing well. So those are kind of ticking up a little bit. The US is the best of the lot, and so that's showing kind of a little bit of a rush to safety into the US markets. We've got the dollar index doing well, we've got treasuries starting to tick up, and we've got the relative performance of equities in the US kind of doing better than other countries. But the countries that are doing poorly, obviously, you know, China and Russia, but also the EuroZone and the UK not doing well either. So we've seen the spectacular moves in all of these commodities that are associated with the Ukraine crisis. So this is wheat, and all of these moves are basically limit up, kind of gap up type moves. So that's Friday's activity, where we kind of gap up to a limit up move, 1209. Kind of trading halted after that limit up boom. We kind of wait to see. I don't know how many moves, 1, 2, 3, is that 4 or 5 days kind of limit up moves in wheat. And again, it's because Ukraine is such an important exporter of wheat on the global market. And I thought the softs, the grains, would kind of weaken. I was seeing some of these kind of patterns starting to roll over a couple of weeks ago, but obviously, you know, that wasn't the case. You know, the Ukraine situation has taken hold of these markets and just driven these prices up from, you know, 760 to 1209, just extraordinary moves in wheat. Corn, similar type activity. We had a whole gathering pattern going on here, and this is where I was wondering, are these going to roll over, these markets going to roll over? And no, because the pro line, the professional line, did not get broken to the downside. That was a whole gathering pattern, and it's just exploded up into this move. So corn's doing well, soybeans also doing well, not so exposed to, you know, the Ukraine kind of situation. But, you know, certainly, you know, at highs. Blue professional bars coming in here at 1200, capturing that, and then, you know, pushing it up at a previous high here. That's a gathering pattern. Blue professional bars, we go above those, so that's showing that they're interested in kind of pushing the prices up. The other one that I didn't realize there was a connection with Ukraine was sugar. So there's sugar beet production out of the Ukraine that accounts for quite a large percentage of the global kind of sugar market. Not nearly as much as the wheat market, but it's a component of that. And so you can see blue professional market bars kind of come in here at $18, and then we've kind of busted up through the trailing stop into another trending move to the upside. So that's kind of interesting. And obviously crude just what can I say about this? Professionals came in at 60 when we had that dip down there. I forget what the news was that drove that down, but they bought all of that. V reversal kind of pushed it up, and then getting through 100 blue professional bars, forcing it through there. And with this Sunday evenings kind of open up, we're up at you know, we're in the mid-20s kind of going on there. So what was the high of that number? At 30.50, so 130. And you know, I think people have been warning about these kind of prices in crude and what it's going to do to you know, the global economy, with oil back up in the hundreds and wherever this kind of ends up being. But all these prices that we see in these commodity markets, this is the commodity price happening in the last few days. That will have a ripple-on effect. It won't be felt in the real economy for, you know, some weeks and months. So watch out for energy inflation, fluid inflation, all of those things. That story is not going away, and it's likely to get worse. Natural gas. Now, natural gas, remember, this is the natural gas that's traded in the US, so this is not the European natural gas. European natural gas has gone bananas, again, based on, you know, the Russia and Ukraine story. But natural gas is kind of strengthening here, but it's sitting underneath this kind of lip here that we have at 650 on natural gas, where we had exhaustion buy, bearish divergence, blue professional bars kind of come in here overbought, and we had a triple signal. So it's just coming up underneath the lip. So we'll see where that goes, whether that kind of reverses and goes the other way, but it's part of that kind of Ukraine story at least. And then looking at the other markets, so here we go. This is copper. Copper, we've been stuck in this range at 450 forever, but we're in an uptrend. We're above the professional line here, and the bars are red, and finally we got that kind of break up out of the 450s into the $5 range happening in copper. Now this is interesting because this is the flight to safety. So this is the 10-year. where we have had huge accumulation here. We've not got an oversold situation. The background isn't printed red. It might print late on this chart, don't know, but we've got exhaustion sell, bullish divergence, a flash pattern there, a whole bunch of blue professional bars, and we're playing with breaking above that trailing stop. On the lower time frame chart, the 460-minute chart, so there's 3 of those bars in a day session of the 10-year. This, we had a triple signal 4 or 5 days ago. Exhaustion sell, bullish divergence, oversold, blue professional bars, break above the trailing stop, bang, and we're off. And this, we had a push down, and we've come back up to the top of that. So looks like the 10-year is breaking into an uptrend. So there's a flight to safety. It's also happened with gold. I don't know, I was never convinced of the gold chart or the silver chart, but that blue professional bar was so prescient there at 1800, just unbelievable. They caught it at that number and then just forced it up, and what are we up? We're almost up at 2,000 bucks. So I don't know, I wasn't on top of the gold picture at all. And silver I always thought was suspect because, you know, it was sitting underneath this massive lip that we had here. So we had, this is back in 2020, we had all this exhaustion buy, blue professional bars, bearish divergence, and we've had triple signals, you know, short in that intervening time. And yes, we've had exhaustion sell, bullish divergence, oversold at that point, but no blue professional bars on silver. So the silver picture is not convincing for me, but that blue professional bar, that was a doozy there. And as soon as we broke through that trailing stop, we knew that this was going to go some places. So unfortunately, it didn't get on top of that one, but that's been a good one. Now, Bitcoin and Ethereum, they definitely had their little breakout move. We've kind of come back down. 35,000 was an important number. The blue professional bars came in, but we weren't able to break through this trailing stop on the daily chart of Bitcoin, and so we hit 44 and we've come back down. That's showing weakness. I know there's a lot of talk in Bitcoin kind of markets about how this is a good test for Bitcoin because we've got the Russians being cut off from SWIFT, we've got Visa, MasterCard and Amex kind of credit card transactions that are being cut off from that system. We've had runs on Russian banks with money being pulled out of ATMs and so on. So the Bitcoin, the crypto people, saying this is a perfect test case for getting into cryptos. And I think we've had a couple of bounces, you know, in the last few weeks because of that, but it's not been enough to bust us through this 44, and Bitcoin is acting more like a risk-on, risk-off type of market. And so, you know, when we have a risk-off situation, it's falling just as fast as the equities market. Ethereum, same kind of thing. You know, we had a whole bunch of blue professional bars kind of come in here at 2100, and that's an important level, but we couldn't get through 35 and we've kind of come back down. It's almost like, I've said this before, the crypto markets on the weekends are still trading, and you can get a good sense of how the equities market is going to open up on Sunday night by looking at what happens between the Friday close and the Sunday open on the cryptos markets. And they've shown you over the last 20, 48 hours that we were going to open up weak on the E-mini. So what have I got else to show you here? Yeah, so let's talk about Forex. So here we go. Oops. Dollar index. So dollar index, we had the triple signal busted out here, a whole bunch of blue professional bars buying that breakout. We come back and test, and we're continuing to this uptrend. We've come back down to the 95, blue professional bars step in and hold it. We're going even higher, but we've not seen exhaustion buy, bearish divergence on the upside there, so we're still going strong on the dollar index. Now what's really important that's going on at the moment, I keep on closing these charts up, here we go. This is the Euro chart. This fell out of bed. So at 114, we had some triple signals, did not work out. As soon as we bust through the trailing stop and better pro-am, bang, at 112, we're down to 108. So money flooding out of the EuroZone, worried, and it's coming into some of the commodity markets. So the Aussie is strengthening, but also coming into the dollar, USD, and buying treasuries. British pound is also getting whacked as well. So we're down here at the bottom of the range here and likely to kind of fall through there. So the British pound is also looking weak. Swiss franc's going to be a little bit of a run to safety here, but we're just stuck in this zone at 108, 109, kind of going nowhere on the Swiss franc. And here's the dollar, Aussie dollar. So on a daily chart, we had blue professional bars coming at the lows, bought the lows here at 70, bang, Little consolidation at 72 there, busted up through there, and so we're up at almost 74 on the Aussie. So that's kind of a commodity play, and it's capital moving out of the Eurozone, kind of coming into these strong kind of commodity markets. Canadian dollar, not so much. It's okay, sitting here 78.5, 79. It's not got the strength that we've seen in the Aussie yet, but possibly it could do that because it's again a commodity-driven kind of foreign exchange market. And lastly, Japanese yen. So if we get a rush out of equities, and it kind of starts a little bit of a global panic, we could see the Japanese yen, with the reversal of the carry trade, kind of starting to strengthen, but nothing yet. Nothing yet. We're oversold. We've had our exhaustion sold, bullish divergence. We've got blue professional bars here, but we've sold off from that kind of area. So Japanese yen is still looking weak. So we'll wait and see. So there we go. A quick run around all of the markets. I think the interesting story for me is moving out of the Eurozone. Euro's weak. The British pound is weak. Money's flowing into some of the commodity markets. The Aussie dollar's looking pretty strong. Brazil's looking strong. And it's flowing into treasuries in the US and to some extent equities plays, so redistributing, out of emerging market equities and more into US equities. But I still think we're going to see weakness in the E-mini until we see that exhaustion pattern that I've been looking for over the last week or so. Anyway, so there we go. Hope your trading goes well this week.